We've never seen so much money come into the space so fast. These are unprecedented times. However, I do believe this is the last great cycle we'll ever have.
Today, I sit down with crypto analyst James of InvestAnswers.
I believe there's a good chance we will exceed the returns of last cycle because the last cycle was manipulated.
To talk the potential of the crypto market in 2024.
This time, everything is different. This is a way more exciting cycle than the last one.
What happens after the Bitcoin halving?
You know, the fact that we are going through the halving.
Most undervalued AI altcoin today.
And I am actually invested in one of the AI tokens. I analyzed all of them and I found this one to be the best kind of bang for the buck.
And much more. And what could go wrong? What could go wrong? Like the video if you appreciate these conversations, and let's start. James, I'm a fan of your channel. I subscribe, but just for the folks that don't know you, what is your background?
Oh, background is financial risk management, hedging money for big companies, and then was always very interested in technology and transformation and leveraging business process automation in things like finance and markets, model building, very heavy on analytics, and was able to retire, get out of the rat race in 2020, diving for the COVID party. History.
And when you found Bitcoin, were you an instant believer, or how did that journey go?
No, in 2017, because I understand the importance of scarcity, it was fascinating to me. I was thinking 21 million, wow. You know, there's 56 million millionaires on earth. If each millionaire decided to buy one Bitcoin, they can't. And that was very like caveman thesis, but scarcity was it. And I did watch the 2017, then 2018 crash, and I was like, but kept a very close eye on it. And then just nibbled away. And come the crash, what I tend to do is I wait for opportune moments and then pounce. For example, I bought all of my Ethereum on one day in March 2020, literally all of it. But I had been nibbling and stacking into Bitcoin. I used to consider that my money market because it's a hard asset and I know markets and I know macro and I know fiat debases. So I thought there's going to be no harm to just stack a little bit of this, and the rest is history.
So I love how analytics based your channel is. Could you just give us a state of the crypto market today with the impact of the Bitcoin ETFs?
Oh, that is a big story. In fact, I have a slide prepared for you if you want, because it's better to explain with numbers.
I love this.
The impact of the ETFs. Let me just pull this up if I can. And advanced. All righty. Little altcoin daily screen there. So let's look at, first of all, this is a fascinating set of numbers. How, if you take the number of Bitcoin in circulation, it's 19.6, 19.7 million Bitcoin. We know as well, I've been studying how many Bitcoin were lost since 2017. That's a big part of my scarcity thesis for Bitcoin. So when you see 19.6, call it 20, there'll never be more than 15 million Bitcoin. That's it. And even on a daily basis, people continue to lose their Bitcoin. So this thing is just getting harder and more scarce over time. But if you look at the breakdown of this and you look at how much the ETFs have sucked in just 62 trading days, and you compare it to just the total in circulation, which doesn't exist, that's a fake number altogether, it's 4.3%. If you exclude Bitcoin not moved in the last 3+ years, it's 8.4%. And if you exclude Bitcoin not moved in the last 1 year, it's 18.7%. So I also look at the HODL statistics, which also there's more and more long-term holders as each day goes by because more and more Bitcoin gets lost and more people understand that this is not something that you just trade in and out of, but if you want security for the future, you stack it as you can. But that is stunning that in just 62 trading days, the new ETF sucked in 20% of all Bitcoin that has not moved in the last year.
And then add that
that has not moved in the last year.
Yeah. And then add that to the Bitcoin halving. It's basically upon us. Implications of the Bitcoin halving.
Yeah, this I have a slide hopefully for every question you ask. This is from HODL 15 Capital, and he had a really nice way of explaining the halving because I keep getting questions. You know, we're going from 900 to 450, but what exactly does that mean for the average Bitcoin holder? But he framed it beautifully that imagine a new ETF is launching in 8 days. They call it Mega Yacht Bitcoin ETF. They'll be buying 450 Bitcoin every single day, even weekends for the next 4 years. Okay. And that's nothing is going to stop that buyer. And those Bitcoin will be taken from the system and destroyed. And that's a good way to understand the scarcity we're talking about here. And the other thing that's really stunning, if you look at the fact that we are going through the halving, if you look at what the ETFs have actually consumed just in 62 days, they are consuming 20x the issuance after the halving in 8 days. So what I mean by that, if you look at the average consumption per day for Fidelity, it's 2,433 Bitcoin, which is astounding considering only 900 are mined. BlackRock, 4,269. This is, again, all they bought over the last 62 days, and the daily average is very high. Grayscale has dumped 4,887 on average a day. Over 304,000 Bitcoin are gone in 62 days, which is staggering. But if you just take all that data, 4,158 are being consumed by these ETFs every single day, net of Grayscale. Now, if you pull Grayscale out, because they're, Michael Sonnenschein said they're almost at equilibrium, they are not going to be dumping as much as they were in the past. That takes us to about 9,044 Bitcoin a day being consumed if the rate over the last 60 days continues as it did. That means over 2,000% of the amount mined will be consumed every day by the ETFs, which is simply not sustainable. The price will go up. And that I find very fascinating. And that doesn't even take into account all the institutions now. After the first 90 days, they're going to begin to allocate. We've got Asian ETFs coming, Hong Kong representing China, a ton of ETFs. And they have pretty much, if you add up the billionaires in Hong Kong and China, almost as many billionaires as in the US. That's a lot of money coming right now into the space. And it's simply hard.
When I see like people talk about the Bitcoin halving on the mainstream media, a lot of people ask, will that be a sell the news event? Which to me is a foolish question because it's either going to go up, 50% chance it's going to go up that day, 50% chance it's going to go down. Long term, you're telling me, very bullish statistics. Could you just lay it out plain and simple, what this means for Bitcoin's price at the end of the year?
Okay, well, the money hasn't arrived yet. So the institutions are coming. They watched for 90 days. This has been kind of an ETF, small allocation game so far. And when the big money starts allocating, even if it's just 1% of their assets under management, the price theoretically can very easily go north of $200,000, $250,000. My conservative price target, I've upped it for this bull run from 150 to about 170. If the CTF consumption continues. Now, when we hit a supply crunch, things could get really bonkers. And that means, if nobody is selling, and there will always be people that bought Bitcoin and say $1,000 and $3,000 and $10,000, they'll want what Raoul Pal calls lifestyle chips. They'll be selling a piece to pocket some cash. That is not going to satisfy the appetite from these big institutions that are coming in. So where we go this year, I'm not sure. But again, my target for ETF inflows for the big nine was 50 billion for the year. We're at 3/5 of the way there already, which is staggering. So my price projections, I'm working on a new set of models, which take into account about 20 different models. And I hope to have that done next week. But right now, the numbers are kind of embarrassing. I'm even afraid to share because you don't want to be that guy that says, "Oh, Bitcoin's going to go to 100K." Last time around, my bull target was 79K, and back in 2001, we hit 69K, so it got pretty close. But that was also a very manipulated cycle. This cycle is very different because we have diminishing supply, increased demand. Bitcoin is now an asset class unto itself. And the world is a house of cards from a debt perspective. So people are really looking for that hedge, that alpha. And then we're not even talking about Japanese pension funds and so much more that could allocate. It's simply just the scarcest asset on earth. So
when you say conservative price target is 170 thereabouts, what is your time frame? Is it like generally speaking end of year into 2025? for this cycle?
That is, I do have, maybe I forgot to share it. I do have a chart for that somewhere, but I'd say to be conservative, this cycle has two ways of going. First of all, it could run for the typical, year and a half. That would take us to September timeframe, 2025. The other alternative is we get a perpetual bid coming in from the ETFs, and that means Bitcoin will follow the path that gold did when they launched their ETF first, which means it could go up straight for 8 years. Which one is going to happen? I'm not sure. There's also talk that things are happening. Well, I've noticed things are happening a lot earlier, a lot faster, which means that 18 months could be brought forward a little bit to maybe early summer 2025 if we don't get that perpetual bid. But I think there's a good chance, a good 20% chance we could get that perpetual bid. So that 170 target is for mid 2025 approximately.
I want to ask you about other protocols, Ethereum, Solana, etc. But anything we didn't mention on Bitcoin?
It's a couple of things. One, what I find very interesting is where we are right now. Well, we could talk more about that later because I think we might be talking other macro elements that tie in, like Fed.
Let's talk about that now. Yeah.
Okay.
When the Federal Reserve cuts rates, what happens?
Yeah. So there's a lot of talk that they're not going to cut rates. The truth of the matter is the Fed do not control inflation. Inflation is driven by factors that are outside the Fed's control. For example, oil drives 40% of the CPI. US does not control the price of oil. OPEC does, Russia does, Saudi Arabia does, and that's the real issue. But State Street believe the Fed will surprise and they will cut by half a point in June. And they are out on their own like this, but they also expect 150 basis points easing during the year. That would really turn on risk assets like Bitcoin in a big way. Will they do this? Logically, they should. The Fed, the data they look at is erroneous. The world is in the whole world are hurt. The European Central Bank is going to cut real soon. And normally, Bank of England, European Central Bank, the Bank of Japan were all in cahoots, coordinating movements. If the European Central Bank cuts and the US dollar, the Fed doesn't, that will bring out a big diversion in the currencies between dollar euros, which could impact the global macro situation. So I think the Fed will have to follow if the ECB does. And the European Central Bank knows the macro situation in Europe and the world are hurt. So they're kind of tied at the hip. That's why I kind of believe this State Street thesis. And it may not be June for the first cut. It may be July. But what happens, the reason we care about Fed cuts is this. This is the a little chart put together of the impact of rates and the price of Bitcoin. Basically, the little green tealy line is rates, and the swirly thing is Bitcoin price. When rates go up, Bitcoin goes down. When rates come down, Bitcoin goes up. Sometimes rates go up and Bitcoin goes up as well, like the special environment, but it'll go up a lot more because when they actually do cut as well, they're going to have to print a lot more money, which will raise the price of Bitcoin in a big way. So it'll be an interesting time either way.
Unless they break the economy, because that's ultimately the risk. If they're reactionary, so they're cutting to prevent something, but they're too late.
Yeah, the economy is already broken. So they share numbers like, oh, GDP is really strong. No, the only thing growing is the US government. And they say, oh, the labor market's really strong. No, the only thing that's growing is part-time jobs. People are getting second and third jobs to live, to make ends meet, as they say. And you know that you're in LA. You probably know people that are personal trainers during the day and they drive an Uber at night and they work at a bar on the weekends. Like I know so many of those people and they are just struggling right now. It's also a fact that 20 of the 50 states in the US are in recession. So people say, oh, what happens if a recession hits? It's like, hello, we've been in and out of recession in different places for quite some time. And that's the whole thing is just, it's all a joke, in my opinion. So what happens if a recession hits? Money printer goes on faster than it is right now. It's just not hitting the people's pockets. It's hitting the banks. But once they put it on in big time, assets will go up. That's just how it works.
Let's talk about other protocols. I'm assuming Ethereum would be the second one you're most bullish on, or maybe that's Solana.
Um, I tend to have a very high conviction when it comes to assets. So what I do is I go hard into very few assets. So if you imagine my portfolio, I'm about 90% in four things. And that covers a lot of stuff. You know, Bitcoin, MicroStrategy, Bitcoin miner like CleanSpark, and Solana. They're my four biggest positions. In full disclosure, my ETH position is about 0.6% of my portfolio because I offloaded to buy Solana last year.
For a beginner that's just entering the crypto market, what is the value prop of Solana?
Um, I think it could be shown with a little bit of data. First of all, you take things like product market fit, best, cheapest, fastest solution, most breadth of dApps. People go to where the user experience is best, to where it's the most features, where they can trade frictionlessly or play with meme coins or whatever else. You want to find that chain that has all of that. And one thing you know in crypto as well, users are very fickle. They will bounce from Matic to Arbitrum to Base from week to week to week. There's no loyalty in crypto, none whatsoever. And we've seen a lot of that happen too. We saw one of the things that I spend a lot of time working on is, the older technology, the older names, even though they have the Lindy effect, which should give them staying power. In crypto, it doesn't matter because the newest technology does best. Again, best, cheapest, fastest, most secure is the place where things are at. And I know that, like Solana, for example, it has more daily active users than far more, like four times the amount of daily active users than Ethereum, and a lot more than some other chains. It does more transactions than all other chains combined. And my thesis was back in 2021, there would be a black hole that consumes everything because the way markets work, you don't have many winners. Like how many Amazons are there? How many Googles are there? How many Apple iPhone makers are there? The winner takes most. And the same thing I assumed would apply to crypto, despite many people saying it probably wouldn't. And here we are. So that's kind of how I think things will shake out.
It's clear that the developers, the users are choosing Solana from everything we've seen this year and prior years. The FUD on Solana is it's more centralized than a Cardano or something else. Does that matter in the long run?
But it depends how you define centralized.
It shuts
So
down, or they can shut it down when it gets overloaded.
no, they can't.
Educate
So
me.
yeah, this is part of it. And one of the rumors that was flying around from some silly person last year, they say, "Oh, there's a switch to turn it off." No, there's not. There's validators. And one of the key things to look at when you look at a chain is what's called Nakamoto coefficient. And that is the minimum number of validators you need to control half of the chain. Okay, so the Nakamoto coefficient for Solana is about 22 right now. For Cardano, I think it's about 20. For Ethereum, it's gone down since they moved to proof of stake away from the mining world. The most decentralized chain of all is Bitcoin by far. But one of the challenges that they've had with outages is it takes so long to get all the validators to reboot if there's a problem, like a bug in code. And most of the stuff, the outages have been caused by bugs in code because they're focused so much on speed. I think of it as, people going around the track on bicycle, and then you got a Formula One car going around the track at 220 miles an hour. The odds of the faster car crashing is much higher than the bicycle going around at 15 miles an hour. And that's the way to think of this. So when it comes to them turning it off, they can't. They need consensus from the validators. And that takes sometimes 4 hours, 5 hours, 8 hours to do to get the majority to reset or reapply a patch or a bug. And the issue right now is there's 1.5 million people hitting the chain every day. They're doing about 60 transactions each on average. And that's making it very busy. There's also other stuff. There's new mining protocols. I think there was a validator that created a new mining protocol called OR, which is bringing things to a halt. The meme coin revolution. is driving a lot of traffic, but it's good that they are being battle tested now to get to the place where you have a billion people in crypto. And that is what's important. And that's, you always have to look ahead to where the puck is going to be 3 to 5 years down the line. And that's what they're getting ready for right now,
My
I believe.
audience is a long-term audience. We're looking for like what's going to have value in 5 years, 10 years. Would you, James, humor me and steel man why something like a Cardano or an Algorand would win over Solana?
Um, I'm not going to say anything bad about any other chain because that just results in a lot of toxicity. But I just look at data. We have spent years building models that analyze every chain across 60 to 100 different parameters. And the key is, you said the key point you said was for the next 5 years, we don't know what chain will be there 6 months from now. I mean, Bitcoin could go to zero, Solana could go to zero, a new chain could be developed by some kid in a basement with some AI help and develop this new chain that runs at 1 million TPS, costs is free, and it's completely decentralized and everybody loves it. That's what we have to prepare for. I always say people need to keep their tap dancing shoes on because we don't know what's coming next. And what's super scary is this whole AI societal impact that's happening. Everything is changing very fast. The world today will be radically different in 24 months, and the world is not ready for that. Nobody can
It
wrap their heads around it.
If Bitcoin clears at least your conservative price projection for this cycle, where does that put Solana?
Things get crazy. So my original, like I bought a lot of Solana at $8 during the big dip and crash. My bull target was $100 back then. I said this, I see Solana going from $8 to $100, and now it's 175, 180. And when I look at my super conservative target for Solana is 360. And that's making 3% of crypto market cap, and crypto market cap goes to $3 trillion. That's a simple back of the napkin model. In terms of other price targets, if the big game changer here is we've already seen what happens with a chain that is full of flaws, but still handles more transactions and users than any other chain, or even all chains combined. What happens if that chain gets 10x faster? That is the scary situation. So there's a thing called Fire Dancer they're working on. If they pull that off, um, that becomes, instead of running at what they are 3,000 TPS right now, it'll go to 50 to 100,000 TPS. And when you get to 50,000 TPS, that's enough to support, that billion users technically, as long as they're not doing more than 100 transactions a day. So
I want to talk about AI, but is there any slides or charts that I'm missing for these L1s, or can we move to AI?
we can move to AI. It's just data slides, which kind of aren't that interested. Well, I have one slide if you want.
Give me one. Give me one.
Let me see. Portion of screen. Hopefully it still remembers the portion. This just shows you the perspective of just year to date of the amount of transactions on Solana. And it's just up and to the right where everything else is kind of flat. There is a new chain coming in there as well. One of the S's below. They're actually growing, but what's super interesting is Base. How Base has come from obscurity. It's a one node centralized layer 2 on ETH from Coinbase. I think it runs at around 26 TPS, and they are doing very well. They are actually smoking a lot of the other L2s. So that's an interesting one to watch. But there is no token for it, and people think, "Oh, I'm going to go buy Base," but you can't, at least yet, for
People
now.
love people love that Coinbase brand name, I would guess, is why they like that.
Yeah, and people should be upset with Coinbase because, during the most important market times, it's often not available. And
That's
there's
true.
a lot of tin hat theories regarding why that is, but we won't go into that.
James, AI and crypto. What's your thesis?
Okay, well, AI first of all, um, I have a slide. Sam Altman is kind of one of the interesting people to listen to. He spoke about AI being a societal revolution and how AI compute, will be more important than energy in the near future. The group or the organization that has the most compute wins. It's that simple. And it is also having an impact on crypto as well. So a lot of new crypto projects are building their own access to compute that people can pay for to do their own inference or manage their own projects as well on the side, which I think is super interesting. And I am actually invested in one of the AI tokens. I analyzed all of them and I found this one to be the best kind of bang for the buck. But
What is it?
um it's a thing called Nosana. So it's a AI play built on Solana. And it's funny, the name actually just thought it's Nosana Solana sounds a bit similar. Maybe that's on purpose. But Nos, of course, maybe it's from the old history of Nostradamus or whatever. I don't know. But in terms of valuation and speed and adoption, I have another AI play as well called Render, positioned in that too. And Render are actually planning to leverage some of the compute from Nosana as well. So I think that'll be an interesting play going forward. And in fact, here's a little chart of there's another one that's very popular out there called Tau, Bit and Soar, but I don't like the fundamentals of it. Played with it, couldn't get it to work. I don't like the compendium score. So I think little ones like Nasana, even though they're tiny, like for example, if Nasana hits the market cap of Tau, the price will go to $55. And I think Nasana was trading under $3 yesterday. So a lot of upside. And I never kind of dabbled before, in 2017, 2018, 2019, you could call me a Bitcoin maxi. And then my first altcoin was Ethereum in March 2020. And since then, I've degenerating a little bit more, but these are very small positions in my overall portfolio because, as I mentioned at the beginning, mainly in just four things.
For AI, like we're going to be getting from non-crypto traditional companies like NVIDIA, we're going to be getting updates for the rest of the year, if not the rest of the decade, as this new, not new, but as this AI thing, emerges into the mainstream. Is that like, to me, it's just, at least this year, AI coins I can see popping off, the quality ones, even though the narrative will lift everything. Is that sort of your view?
Yeah, definitely. I'm basically fully invested in two things. It's AI and crypto. And my allocations, I'm probably 80% in crypto and crypto proxies, which span also equities like miners and MicroStrategy. So that's been my whole play. But there will come a time when we pivot away from crypto. If we get to that top of the bull signal, that'll be the time to rotate into other assets
What
that
is
are
that signal?
yet to pop up.
What do you use?
I use a thing called the top and bottom indicator to identify when Bitcoin gets to the top. I can show you an image of it if you like, and where
Is this
we are to.
proprietary or is this?
It's a trading view indicator that anybody can pull, but this is the top and bottom indicator. So basically it pulls in about 22, 23 different on-chain indicators and creates a composite score and identifies where we are in the cycle based on all previous cycles. And this time is a little bit different in terms of on-chain because the ETFs are having an impact on Bitcoin on-chain analysis. But you can actually drill into this and you can pull out any one of those on-chain indicators yourself and see how they compare. Like it includes all the usual stuff like pi cycle, etc. But the key is how it's built as a composite score. So as I say we are halfway to heaven right now. So if you look at the colors, you see that cold ice blue and then the teal and then the light blue and then the lime and then the yellow. We're at the yellow stage right now. The blue line is the price of Bitcoin. You can see in previous cycles, it's not a log chart. If it's a log chart, you can see much clearer how it correlates. It identifies the tops perfectly in the past. But when we start getting into the orange, dark orange, red, that's when you start to get nervous, and that's when you start to take some off the table. We're not there yet. We're halfway, still a long way to go. And again, this model itself, it could be redundant. If we stay orange forever because we get that perpetual bid, then we hold forever, or we no need to hedge. But if we start getting really red, that's a sign to maybe take some off the table or hedge the Bitcoin position.
James, do you think that this could be one of the last great crypto bull runs? Only because the largest asset managers on earth are buying now. People are seeing value in Solana and ETH now. That's something we've always just hoped for.
Yeah. Well, we do have Bitcoin black hole, so it is a very special time with the institutions coming in and buying like this. We've never seen so much money come into the space so fast. These are unprecedented times. However, I do believe this is the last great cycle we'll ever have. I believe there's a good chance we will exceed the returns of last cycle because the last cycle was manipulated. But the fact of the matter is, there will be diminishing returns because when you have $1 trillion asset, it's very difficult for it to grow. And if you look at the diminishing returns, the power law from Bensig here, you can see it's easy to go from 10 to $100, harder to go from 1,000 to 10,000. Pretty tricky to go from 10,000 to 100,000. Now, 100,000 to a million is a big, big, big hill to climb. Will we get to $1 million? Yes. The question is when. I don't know if it's going to be 2028 or 2040, but somewhere in that time frame. But the sad news is people get excited when they hear about Bitcoin going to $1 million. But the fact is, in 8 years, the dollar will debase by 45 to 55%. So that $1 million will only be 450 to $550,000 in real value. So everybody don't get too excited about $1 million. $1 million in the future won't be worth very much. Being back in the day when I was a kid, it's like, oh my, that man over there is a millionaire, or that lady with the driver, she's a millionaire. It's like, what $1 million will buy you in LA these days.
A cup of coffee and an Uber ride.
Exactly, something like that. Now, I do believe what is exciting though is this is the last big crypto bull run I think we'll see with these types of gains driven by the Bitcoin black hole. But then in the future, going back to your AI point, I believe it'll be extremely difficult to get excess returns in the market being a trader because AI will control everything. Those that run the AI, have the AI, build the models, they'll be the ones tapping the markets first before us retail normies can do it. So what I do urge people is this could be the last big one for us to make really, truly life-changing money. So stay the course. Don't try to get too cute. Don't try play in and out of the market. Bitcoin will go up. How high, how fast, we're not sure. But it's looking like if you asked me a year ago, I've nearly doubled my expectations because of the ETFs. They are way bigger than my wildest dreams. And still remember as well, I think 70% of Bitcoin is now held by these long-term holders. And many of them have been in for a long time, or their coins are lost. So this thing is a
And
lot
what could go
scarcer.
wrong? What could go wrong? Like, what would be a reason Bitcoin muddles out at 80,000 and doesn't succeed like you think it will?
There would have to be a problem with the protocol, or a serious manipulator, or a scary thing like a fork, or a double spend problem. These are kind of the things that could blow up on the horizon. That's why everybody needs to go into this thing with the expectation there's always a 1% chance that it could go to zero. And when you know that, you can allocate accordingly, but you never want to have all your eggs in one basket.
James, I love your perspective. I subscribe to you. Links for your stuff are down below. Final thoughts
Thank you
for the
so much.
Altcoin Daily Army.
Um, I think probably the most important thing is allocations in investing. Allocations are key. Think about what are the big things changing the world right now. My two big narratives are AI and crypto, and I'm absolutely 100% allocated to those two. Um, really do a lot of research, follow the money, follow the adoption, follow the assets with the best product market fit and the best leadership teams, keep up with regulations and other things. And probably most important is in life, it takes a lifetime to build wealth and a second to lose it. So anybody who is in crypto or even anywhere in the world, you are a target. There are people coming for you and coming for your bag. So first thing you do is lock up your security and be very careful out there. That's probably the most important thing, because I've heard of people literally making $1 million and hooking a wallet up to something and gone. So that's a
Sound
terrifying
advice.
prospect. Yeah,
Thank you, James.
my pleasure. And well, what about you? What are your plans for this bull market, and where do you see things going?
Oh man, my audience has heard from me. I mean, very early on, I was always under the impression that Bitcoin has at least, and I do agree, diminishing returns, but at least minimum 3x from previous all-time highs. We went from 20K to over 60K. Um, so
So 180, 200 is possible for you.
well, I always said diminishing returns minimum, it would be a 2x. So minimum was always 120. And I haven't changed since then, but that's my ultra conservative. But as you said, fundamentally things are much more bullish today post ETFs than when I was speculating, before the ETFs. So
Yeah, this time is literally. I'm a student of history, but this time everything is different. Everything is different, and it's super exciting. This is a way more exciting cycle than the last one, I believe. Way more.